In today's video, we break down Berkshire Hathaway, analyzing the company's future following a huge fall in price and helping you understand if it's a good long-term investment for your portfolio. One of the most popular stocks in the world, founded by the infamous Warren Buffett, Berkshire is a multinational conglomerate owning and investing in some of the biggest companies in America. Of course, as with everything else right now, Berkshire stock is beat down. Its Class B stock, which was trading as high as $231 a share earlier this year, is now down to $179, falling nearly 23% from peak to bottom. If we look at Berkshire's investments, we can see that at the end of 2019, the company's equity on its public investments totaled $248 billion. Now with the crash, this number has come down to nearly $180 billion. Individually, each of its holdings has indeed taken a massive hit as a result of the recent coronavirus crisis. But as always, we have to remember this is Warren Buffett's baby, and his portfolio is not one built on speculation, but on fundamentals and sound businesses. If his theory and hypothesis is correct, we as investors should not worry about the long-term prices, as they have historically over and over proved that the portfolio can and will weather the storm and come out on top in the long term. To really understand why Berkshire is a good investment, especially at this price, we go to its financial documents. Specifically, we take a look at its earnings. Right here, we're looking at only the top 10 holdings in the portfolio. In 2019, for an example, Berkshire received $3.7 billion just in dividends from these businesses. Over in the retained earnings section, which represents the amount of net income left over for a business after it has paid out dividends to its shareholders, the total earned is nearly $8 billion. Because Berkshire doesn't have a majority stake in these businesses, this line doesn't get applied to its own return on investments. But nevertheless, it's something you definitely have to consider when thinking about the health of Berkshire, as it owns significant pieces of each individual company related to that retained earnings number. In their own words from the 2019 stockholder letter, it reads, "In non-controlled companies in which we own marketable stocks, only the dividends that Berkshire receives are recorded in the operating earnings we report. The retained earnings, they're working hard in creating much added value, but not in a way that deposits those gains directly into Berkshire's reported earnings. Overall, the retained earnings are certain to be a major factor of importance in the growth of Berkshire's value." On top of their public stock market investments, Berkshire also has a separate portfolio of Berkshire businesses that they own 100% outright. These include companies operating in the insurance business, railroads, utilities, energy, manufacturing, and even the retail sector. A whole bunch of diverse and healthy companies that earned nearly $23.3 billion in 2019. So if we take the stock portfolio earnings in 2019, which totaled $8.3 billion, and add the owned businesses earnings totaling $23.3 billion, Berkshire takes in $31.6 billion in earnings each year with its vast portfolio in total. This is all on a market cap of $435 billion. So if we divide that 435 by our $31.6 billion, we get a PE ratio of 13.76 for a business return of around 8%. But there's another layer to all this. Berkshire has around $100 billion in cash. Some of that is held for something called insurance companies, but we have to adjust our calculation due to this fact. For this reason, we calculate something we're going to call the real market cap, essentially 435, our official market cap, minus the $100 billion in cash, which brings the real market cap to $335 billion for an adjusted PE ratio of around 10 and an adjusted real business return of nearly 10%. So what does this all mean for the future? Well, look no further than the recent annual letter to shareholders. Remember that Berkshire has around $100 billion in cash to buy up value in this beat-down market. Warren has went as far as announcing to shareholders that if anybody is looking to dump at least $20 million of his company's stock, he's willing to buy it, and even gave a phone number to call because he wants to be the first in line. SEC rules only allow him to buy about 1/3 of the daily volume, but regardless, this just goes to show how happy it makes him to do buybacks, and this was nearly 2 months ago when prices were much higher than today. Today, he must be extremely satisfied buying stocks back with prices nearing a 3-year low. As you may know from my previous videos, one of my favorite Buffett quotes is to be fearful when others are greedy and be greedy when others are fearful. Well, now it's the time to put that into action. Others are fearful, and with $100 billion in the bank, it's finally time for Buffett to be greedy. So with all that, the likelihood Berkshire faces extreme risk in this environment, something like bankruptcy, is slim to none, and their stock price is likely to go much, much higher from here. If we look back at some of the older letters to shareholders, one thing Buffett and Charlie Munger make very clear is that Berkshire will never risk getting caught short of cash and will forever remain a financial fortress. For as long as there's capitalism and a functioning stock market, Berkshire will survive due to the stringent strategy and practices Charlie and Buffett both have engraved in the culture in Omaha, always having cash on hand and spending it only when long-term prospects are priced cheaply. Now with $100 billion in the bank, there is no doubt Berkshire will be able to put that money to use again, investing in businesses that will only add to their growing retained earnings outlook and compound to infinity. Long term, they own great businesses that will only grow from here. They always have cash on hand during crises, and there is essentially no risk to this stock. With the 0% interest rate environment, Berkshire at this price is very, very cheap. And it's completely possible that in the near future, Berkshire grows rapidly into a trillion, maybe even a $1.5 trillion company. A company that I will 100% look to add to my portfolio for the long term. Thank you guys for watching. Please let me know what you think in the comments below. And as always, stay safe, stay healthy, and see you on my next video.